Hi, everyone, and welcome to our second webinar live stream about the smart money concept together with Roman. Hi, Roman. How are you doing? Roman?
Hello.
Hello.
One moment. I want to fix some sound issues. Hello, everyone. Happy to see you here again.
Yeah, good to see you again as well. So, from last week, how did you think it went? Was a good one? You learn something for this live stream on what we can do better? Well, I hope that we improve the sound. I'm just looking at Ragnar to see if he can hear us better now. Getting the live feedback. Yes, we've got the thumbs up. Dimitro's got the thumbs up. Good. So, what are we going to talk about today, Roman?
Yeah, so today I want to show you one of the basics of the smart money. It is a topic about how to define the swing points. And this will help us much later on the later lessons. But yeah, this is like the fundamental thing that we need to learn before we can identify the structure and identify points of interest and so on.
Yeah, because basically with the price action, we're looking for price action to move past the lower lows and the higher highs, right?
Yeah, exactly. And yeah, before we do that, I wanted to tease you a little with an example of the trade that can be done using the smart money strategy.
Right. Yes, because that's basically one of the questions that we got last week was like, how do you trade this? And because we were just talking about the fundamentals and the basics, of course, which is still going to be the main topic of this live stream, but we do want to show you like what is this strategy about? Like what does a typical position look like? So this is what Roman's going to be showing you now.
Yeah. So as you remember on the last stream, I showed you this chart as smart money in a nutshell, which basically show you how can you enter the trades using smart money. And the idea is that first you need to identify the market structure on high time frame. So for example, on daily time frame, you can see that market is going up. And then you can identify the point of interest on this high time frame. So it can be fair value gap, it can be order block, liquidity sweep, or anything else. We will learn about points of interest later. And so what you need to do is just to wait until the price gets down into this area. And when it gets there, then you need to switch to lower time frame. So if higher time frame is daily, then lower time frame can be 1 hour or maybe 4 hours. And on this lower time frame, you just need to wait for the reversal pattern. And as soon as you notice it, then you can enter the position. So that's the idea. And now I want to show you an example on the real chart.
Yeah, because those lines look fine, but that's the perfect setup, right? But it's never like that.
Yeah, here is an example of the trade. So as we can see, we can switch, for example, for a 4-hour chart. We can see that we have a bearish structure, like the price is going down, obviously.
Mm-hmm. Yeah, lots of lower highs and lower lows.
Yeah, exactly. And then let me actually just remove all this. And let's use the backtest feature. So here we can see that we have a fair value gap formed on daily time frame.
Yeah, so for people that were in there last week or forgot what the fair value gap is, that is just you have 3 candles, so these 3 candles, then you have this point and this point, so the lowest one of the first candle and the highest one of the third candle, that forms the fair value gap.
Yeah, exactly. So we can see that price has tested this fair value gap once slightly. So here we can see a little touch of the fair value gap, but we want to see it going over the middle line. to give us more confidence. So we can wait until price gets there. So now we can see price reaches a little higher. We can switch to 4-hour time frame to see this move in details. Yeah, you can see that price has fulfilled this fair value gap and now going down. And already on 4-hour time frame, you can see this pattern forming. So this one, where we could enter a short position like that. So we have a liquidity sweep and this market shift. Here it is on the chart. So we have this liquidity sweep. And this is the shift. So already we could enter a position like this, aiming towards this sell side liquidity. This would give us a nice 2-to-1 risk to reward ratio. But we can actually go in further. So let's say I don't like this risk to reward. I want something more for me. What I can do is that
it is a quite high risky trade like that, right?
Yeah. So now you can see that on the 4-hour time frame, we have formed another fair value gap here. And what I can do is just wait until price gets back into this area and switch to the 15-minute time frame. And so we just need to wait until on 15-minute time frame we form another shift as we saw on the 4-hour time frame. So currently, this is our liquidity sweep. So we are waiting until price gets below this red line and closes with the candle body, not with the wick, but with the body.
Right, because it's touched it now, but it's not a valid entry yet.
Yeah, it doesn't go. We need to make sure it closes below this.
Yeah. So in theory, you could set like a price alert that would notify you on the candle close for 15 minutes.
Yeah, exactly. That's what
so you don't have to
do.
wait for it. Yeah, that's a great one. Can you show people how to do that?
Not on backtest, I think.
Oh no, that's true. Show it in a minute then.
Yeah, I'll show it later. Yeah, so now we can see that we have a candle close below this candle. And what we can do now is that we can open the short position, placing our stop loss beyond this swing high on 15-minute time frame.
So beyond the sweep, yeah.
Yeah. And we can aim towards this closest liquidity here.
Wow, that's a big difference.
Yeah, and if you remember,
you said it on the sell side liquidity. So this is just an in between take profit.
Yeah, this can be like a conservative target, and you can set it like this if you want, and you already get 10 risk to reward ratio.
Oh my god!
But we can be conservative like this. Yeah. This is.
And people who were watching the live stream with me and Kata about the risk-reward ratio and the management, if you get 10 risk-reward ratio, that your success rate can be very low, very low.
Yeah, you can actually like have 11% win rate and you'll be profitable, but this is quite risky. I'm more conservative, so I prefer having like 1 to 3 risk to reward ratio. And yeah, this gives you like, if you get like, I don't know, like 40% win rate, you're already profitable, and that's good enough.
Yeah, exactly.
So, yeah.
I mean, it's nice if you can get the 1 to 10. So definitely let your profits ride, but getting a conservative 1 to 3 first take profit out will probably dramatically increase your success rate. And at a 1 to 3 risk reward ratio, that's still good. Maybe even more profitable because you get out of the trade quicker. and you can get into a new one that might have another 1 to 3.
Yeah, so let's see how this position going.
So satisfying to watch. I wish all charts
Yeah,
were like this.
When it is in green, yeah, it is.
I'd
really
be
good.
amazing in trading if it went this fast. But the percentages on this, I mean, you could set it to a second candle, but yeah, you're not going to be very profitable on a second time frame.
And yeah, here it is. You can see that we reach the take profit. And if you compare the enter that I would have on 4-hour time frame, so it would be this. So it's 2 risk to reward ratio, and here we have 5.5.
Yeah, and the main reason for it is because your stop loss is a lot closer, right? So you're on the lower time frame swing, so you will get out of the market quicker if you see that it's actually turning against you. You're not waiting for this whole price action to play out. This one is dangerous then.
Yeah, sometimes it is more risky to enter on lower time frame because you can always have those over sweeps. So we could easily see something like this.
Yeah.
But yeah, this is the risk you take, and you get much higher reward for that.
Correct.
So that's the difference.
Yep.
Okay. Yeah. So to summarize this, you can see that we've identified the structure first. We had this bearish structure. Then we've identified this point of interest. It was on daily time frame. So daily fair value gap. And as soon as price got into this area, we switched to 4-hour time frame. We've seen this market shift on 4-hour time frame. We've seen another point of interest, and then we switched into 15-minute time frame. And we found our entry, and it worked out perfectly this time.
Nice. So, but in order to identify the trend and the direction, and then also the points of interest, we first need to look at the highs and lows, right?
Yeah, exactly. So don't rush into trading. We need to make sure that we learn the basics, because if we misunderstand how to identify the structural swing points, then we will most likely misidentify the market direction, and we will mostly trade into the opposite direction. So this is not what we want.
I've asked you several times, right? So I would have shown you a chart and say, is this one? And then you're like, no, because you've misidentified the higher high or the lower low. And I'm like, how? Like, and then he's like, go back to the basic. So here we are. We're back to the basic.
Yeah. So let's learn this together. I have some images for you. So this is the basic structure on the market that you will see. So it can go like this. So you have this swing high, then you have some swings in the middle. So some traders would identify these points as swings, and so they might think that this is a bearish structure already, and they will start selling. And if you start selling somewhere here, then you would lose because you misidentified the structure.
Yeah. And that's what I did a lot.
Yeah. So that what we need to remember is that this is a structural swing point, swing high. And this is what we have here. This is just a swing high. So this is not a structural swing high. But you can just ignore these usually. I mean, if you find these on daily time frame, then on 1-hour time frame, you could actually trade this as a real structure, because market is fractal, and you can go on lower time frame and find the same. So yeah, so Here's an example of the bearish structure. It is pretty much the same as the previous one. It also has these fake swings that are not actual structural points.
Yeah, because it might indicate a reversal, but actually it's not. It's just that internal movement, right?
Yeah, actually, like when I just started learning smart money, I got into this trap. So I went into marking every point as a swing, and I really got into this trap, and I lost a lot of trades because I thought, oh yeah, we are reversing now. We're going up in this example. So I would see this, and I would go like, okay, we can enter long position like this. And
yeah.
this is what happened to
Market
me.
has shifted. We're looking for longs again. But yeah.
Yeah, this is what happens when you just like sneak peek into the basics, but not actually learn them properly.
But is it then also maybe
So,
because you had a bias towards going long? Like maybe you're like, because a lot of people are afraid to go short.
I mean, this happened to me on any direction. It will happen to me on longs and on shorts like this as well.
Yeah.
So yeah, I saw that you need to find these swing points. I didn't learn how to properly do that, and I just started trading already.
Right.
This was
So
my
how can
mistake.
we avoid that mistake? Because I've been doing that. I've made some good successes with it, but I think it's more luck than than actually following the basics.
Yeah. So what we need to do is that we need to first know how to properly identify the swings. So if we start with this one, this is how any swing point looks like. It is usually a 3-candle formation. So you have one candle, second candle, and third candle. And one of them has to be either higher of any other or lower. So this would be a swing low, and 2 candles next to it are higher, or this will be a swing high, and 2 candles next to it are lower than the maximum of this candle.
Yeah.
So if you have like something like this, so this is not a swing high. You would not have any swings here until you have a candle close to it that is lower. So in this point, this would be our swing high. This is what you need to start with.
And
So yeah,
is
three
it
candle
just
formation.
is it just the wicks that count, or is the body also like does it would it matter if this opened like here?
It doesn't matter. So it can be anywhere, even if it was like this, as long as this candle is lower than the maximum point of this one. So this would be the swing high.
Yeah. So it's the true high point of the 3-candle formation.
Yeah.
Yeah.
So it's just the maximum point in this case and the minimum point in this case.
Yeah.
And same works here. So if we had this candle like this, it would not be a swing low because we don't have a candle next to it that is lower. But if it was like this, then yeah, then we can say that this is a swing low because candles on each side of this one they closed higher than this minimum point.
Yep.
So yeah, so this is the very basic information how to find the swing point, but this is not a structural swing point. Here's one of the rules. So when we look for the structural swing points, they cannot overlap. So if we have, let me go back here.
You can really tell that you're a designer because I would struggle with all these these images and things.
I try my best. Yeah, so if we have a 3-candle formation here, these first 3 candles that formed a swing high here, then we cannot say that this is a swing low, even though it has 3 candles. because you can see that candles are overlapping each other. So these 3 candles are overlapping other 3 candles. This is usually not right, but this, as you can see, sometimes they can overlap, but we'll get to these cases later.
Yeah, someone is asking, are you referring to the SFP, sawing failure pattern? Is that a familiar term for you, or?
Yeah, swing failure pattern. Yeah,
Swing
it's
failure.
also in the smart money as well. So yeah.
Yes, is the answer.
Yeah. So yeah, here, as I said, these are like this bottom candle cannot be counted as a swing low because these 2 candles are overlapping the other candles that are forming swing high. But when you have these 3 candles next to each other, this is already better. So this can be counted as a swing high and swing low.
Right. But do you prefer more distance between them, or like this? Obviously, this is the bare minimum. But would you consider it like a weaker swing high or low if it's it's like
ideally you want to have something in between them to make sure it is a proper swing, but we can look for more examples when we get to the chart.
And probably also a little bit more distance in terms of the swing high and swing low, because otherwise you're just in a consolidation phase, right? And it's very difficult to properly identify the swing highs and lows.
Yeah, but if you are like zoom the chart like this, it looks already
anything can be made big.
Yeah, and this is not good.
You're cheating.
Yeah, but yeah, we'll get to the examples, and yeah, I'll show you the things how to do that.
Yeah, cool.
Okay, so do you have any questions? Maybe you have any questions in the chat?
I don't see any questions in the chat just yet. No, I'm just, for me, I'm just wondering, like, how do you prepare, like, how do you find these? How do you train your eyes to do this?
Yeah, you just need to turn on the backtest mode, the replay, and just go through as much history as you can.
Right.
This is the secret.
The secret is do the absolute boring job.
Yeah, but it works. The more you see, the more your eyes notice these, then next time, like after a couple of hours doing this, you will not need pointing these.
Yeah, you don't need to annotate circles them anymore. You would just see it.
Yeah, exactly.
So question, yeah, also, do you see them in your dreams?
Not yet.
Not yet.
Yeah, it happens sometime. So yeah, I also wanted to talk about the liquidity. We mentioned it on the previous stream. So the reason that we need to identify these swings is that liquidity is always formed beyond the levels of the swing. So this is usually the area, as we know, where the smart money and the general market moves the price. So if they want to, like in this example, we have a bullish structure going up, then forming some consolidation. We are collecting a lot of liquidity at the bottom, which is actually, as you know, it is referred as the support level in classical trading technical analysis.
Retail traders get in there, put their stop losses below it.
Yeah, exactly. And resistance level. And these levels are just a lot of liquidity on each side, no matter if it's uptrend or downtrend.
Yeah, for that specific reason, right? Because a lot of retail traders, they use it as support and resistance, and they put their stop loss on the other side, creating a bunch of liquidity on the other side.
Yeah. And so since smart money, let's say they want to buy, in order to buy, you need a lot of traders to sell at specific price. So they usually push the narrative and push the price down into this area, stopping out these retail traders. So retail traders sell while smart money is buying, and then they go up and hunt in the liquidity on the other side.
And then it forms a new swing low.
Now, this is actually not a swing low at this point. This would be just liquidity sweep.
Okay.
But yeah, we'll get to examples soon. You can actually already start doing that if you want.
Yeah, so how would you typically do a test run?
Yeah, one moment. I wanted to also show you one thing on how to properly validate the swing.
Oh, yes.
So here is a document that we have, and this is an important information. So if we have swing high, then we cannot validate it until we have any candles that close below the minimum level of this swing high. So if price just keeps going up, then it is not a swing high.
Okay.
You know, if I can draw here.
Yeah, you should be able to.
Yeah, so if we have price going up like this, then this is not a swing high. So we need it to go below this level. Ideally, we need candle close like this. And then we can say, okay, this is swing high. This is probably swing low, but we cannot say for sure yet. And the same goes for the swing low like this. So we have swing low, we have the maximum of this candle, and we need to make sure that price closes below this above this level in order to properly validate the swing.
Right.
So this is
so again, the swing high validation happens when the middle candle of the swing high is followed by a close below that level. Right. So here it closes below this level.
Yeah.
And that's when it validates as a swing high, because that eliminates a lot of them, right? That eliminates a lot of the swing highs.
Yeah, that's true. There are some cases when you can ignore this rule, when you see like a clear swing, but it happens so fast that like candles just didn't form a good looking pattern that you see in the book. But if you see a nice correction, then you can say like, yeah, it was a swing, and we can use that.
Someone's asking how to trade the swing failure pattern with Altrady, including setting up alerts and initiating the trade. Well, showing you how to set up the trades and everything is something that we plan to do for future live streams, because right now we're still in the basics, and we don't really like, or we don't really want people to see these videos and think, oh, this is how I set it up, and go in, and then actually getting into positions that aren't good positions to take. So we will show you how to set up orders and trades probably at the end of this stream, so that we can show you in general how to set up these trades. But we do not encourage you to take any trades just yet based on the information that we've given you, because we're still learning. So we hope that you learn from us too.
Yeah, so we will show these later, probably in further streams, because it is not a good time to start trading when you don't know much about the strategy.
Yeah. Roman has also said to me that I'm not allowed to trade yet. I'm too inexperienced in this yet. Someone's asked a question: if a new candle creates both a higher high and a lower low, extending the range, which one is then more important?
Yeah, we will get to examples and see that, because usually you don't take these candles into consideration. But yeah, we'll see what we can find on the chart. If we have anything like this, then we will explain that.
Mm-hmm. Okay.
But usually you want to wait for those 3 candle formation, as I showed you before. Let me see if I can find it. Yeah, so you want to wait until you have 3 candles. And if you have this one candle that is doing like this, then you usually want to ignore it.
Yeah, this is not a good, not a real swing one.
Yeah, but it depends, because a lot of things can happen on the market, and like every case is unique. And sometimes you need to break the rules and do something else. I mean, sometimes it works. Okay, so let's start identifying swings. I'll just start placing these initial swings here, and then we can continue. So this would be a swing low that is going from somewhere here.
Yeah, so it doesn't matter where you start, as long as you take a starting point somewhere and you start identifying them.
Yeah, I mean, ideally, you want to make sure that your start is correct. So, like, say I remove these, like, you don't want to start from these points and identify them as swings, because, well, they are not so important. So you need to make sure you see some kind of a break of structure. And here I can see that. So we had these swings, like I can go slightly back and see that I have these swings that are being broken here.
Yeah, so they are the strong lower lows, and
these are weak lows, actually,
weak
and
lows.
Strong highs. Yeah,
strong highs.
So
weak lows.
Okay, so we are here. Let's do it like, so I'll start to play right here. So let's say we're starting here. We see that price breaks below our previous swing low, and so we are not ready to identify any swing highs in this area until price breaks below this line. So assuming if we were here, we cannot say that this is a swing high, because price has to get out of these current range that we are in. So from this range.
Right. Otherwise, it's still like an internal high.
Yeah. So at this moment, this is our structure. So we have this high and low, and this is our structure that we are using. So this is bearish structure, and we only trade within this area, and we cannot identify any swings in this area until price gets either above this area or below this area.
Right, and in both situations, if that happens, so if it goes to the top, yeah, so if it goes there, then this is still a higher high, or no, it's a lower high then, because it's a lower than
if price goes there, so breaking this point,
then this is not valid.
Yeah, this is not valid at all. So we'll have these lower low as it is, and we will look for new higher highs somewhere here when we see them forming our 3 candle formation.
Right. So, but if it breaks down here, then this one does count.
Yeah. So let's continue with the chart.
I think that's also one of my pitfalls, where I identify them too quickly as a high or a low point.
Okay. Yeah. So see, we have the chart breaking below this swing low, and as soon as that happens, we can already just find the maximum point between this lower low and this new breakdown. It is not lower low yet. So this will be the highest point. This will be our new swing high. So this is not valid anymore. So we have a new range, but we don't have a swing low yet. We need to wait until we form 3 candle formation. So as you can see, like here we have 3 candles with one definitely being lower than others.
Mm-hmm.
So can we say that this is a swing low?
Well, a potential one, I suppose, because it's not been confirmed yet, right?
Exactly. Yeah. So we need to wait until price closes above this maximum.
Oh, that's actually a
candle.
good one. I never thought about that. Like to put the line there and to say as soon as it crosses this line, then this candle gets validated as a swing low. That's a brilliant idea, actually.
Yeah, you can see that it didn't get validated yet.
Poof! Today I learned. Yeah, because now you can just remove the line and say it's invalid, and now you can set. So now you would say this is a potential one. You put the line there. Oh, awesome! This is going to help me a lot.
So yeah, this is not a valid swing low yet until price crosses this red line.
And it gets to close, right?
Yeah. Ideally the close, but yeah, sometimes you can count the wicks. Just sometimes you can ignore that. So yeah, now we can say that this is our swing low and it is validated, and that's good. Okay, so we have swing low and this is our swing high.
So and this will be range.
Our sell side liquidity and this is our buy side liquidity. So a lot of liquidity now lies in this area and in this area. Yeah, this is the new range. This is the area that we're working with at the moment.
Yeah.
Then we just need to wait until price breaks out beyond this area that we have. So beyond these liquidity levels. And like we cannot mark these points as swings. That is exactly the mistake that I made when I traded. Because we have our range. We cannot identify these as swings point.
Yeah. No, I think it's again, this is really helpful for me because yeah, I was also doing the same thing, like drawing them there and there and there, because they are swing highs, right? But they're internally, they're not outside of this range that we're currently looking at. And I never really realized the importance of this range. But that's exactly what is very important to be trading in, right?
Yeah, exactly. And sometimes you can identify, let's say we have this structure on the 4-hour time frame, but then if you switch to 1-hour time frame, then you can actually like start trading this one as a new structure. It actually has been broken here. So yeah, it would be a new bullish structure on 1-hour time frame.
Well, this one would have been broken here, right?
Well, you
for
don't
this
have
candle
any
at
swings.
least, for this candle, because this is
you don't have a. Yeah, I mean, you would confirm this swing point like here.
Yeah,
but
the swing high.
I mean,
yeah, you're talking about the swing high, so you're talking about the range on the 1-hour time frame in this case.
Yeah. So if you would trade on the 1-hour time frame, you could start taking long positions here. But again, you would keep in mind that on 4-hour time frame, we're still in bearish structure. So you would be very careful with this.
Yeah, because in the bearish structure, you would expect, so this one, you would expect it to be a lower high. So it could top out anywhere around in well, basically anywhere in this range, it can top out, right?
Yeah.
So that's why this is, because you always tell me, like, because I was so happy with myself when I started with this, and it was like I was showing you, it was like, oh, look at this structure, is this a good one? And then you're like, no, because on the higher time frame, you're not in the, or you're in the risky zone, and this is not a trade that I would take. I was like, oh, God damn, I was just there sitting there for like half an hour looking for this, and now you tell me that it's not valid because on the higher time frame, and now it makes sense, like. I didn't see that this information before. This is new for me as well.
Okay, yeah. So let's continue just drawing this and see where we get. So until the price breaks beyond this area, we cannot identify any new swings. Even though it is really tempting, like you want to mark every point here, but That's not how it works.
Well, yeah, maybe potential short here, right? Actually, that would have worked, but
yeah, let's check on higher time frame. Well, I mean, yeah, there were not so clear points of interest, but if we would check bid levels, yeah, this was the optimal trade entry range, and you would look for shorts in this area.
Right. So Fibonacci is one that we will be using in a later live stream, right?
Yeah, we will learn about this later. But as you can see, the short would work out pretty well here because price went down. Since we were in the bearish structure, we were falling down, and it confirmed, even though it seemed that the price started growing pretty good.
Yeah, the momentum was there. Good upwards momentum, but nothing too crazy. But then again, it didn't hold, and it indeed formed this. Because now this one counts, right? Because this one's broken, so this one counts as the Although we're on the 4-hour time frame.
Yeah, this will be our new swing high.
Also setting the new range for the trading zone or the trading area.
Yeah, so we're not sure where our swing low yet.
Yeah, so currently this market is not not even in a potentially tradable situation, right? Because we have no clue what's going on.
It is breaking down, so on lower time frame you would be looking for short positions here as well. But yeah, ideally you want to wait until price forms some kind of a swing low, and then it returns into some points of interest in this area, and then you would want for you'd look for a continuation.
Yeah, because then the profit margin is far larger, right?
Yeah. Okay, so let's look for the swing low. This one doesn't work yet.
Ooh, let me try. So, no, nothing. Oh, nope, nothing yet. No.
Yeah. Well, I mean, actually, you can say like we don't have.
Oh yeah, true. Yeah.
Candle close here,
doesn't
but
close.
We have a wick. Yeah, but now we have a candle close.
Yeah. Oh wow. Yeah.
So
I missed
this would
one.
be
this clear one. Yeah.
Yeah. So this would be our new trading range. Like this one.
And then we're still in a bearish structure, so we would still be looking for shorts at this point in time, right? If we were actually trading. Right now, we're just determining what are the lows and the highs, so that we can identify our trading area. So that's the important. So to reiterate what we're doing here, the important part is that we're identifying this zone in which we're capable of looking for trades. If we don't have this zone, then we don't have any reason to look in this market for trades yet. Like we have to wait until this structure forms. So that's what we're doing right here. We're not looking for trades just yet. We're just looking for the tradable zone, and that is determined by the swing highs and swing lows, and how to properly identify the swing highs and swing lows.
Yeah. So let's continue. Let's see where we get next.
Oh,
okay,
we've got a break.
This is an interesting one. Yeah. So would you say that this is a swing high?
Oh, let me check. I see this one, then I would draw my line here and it closes. So technically, yes.
Yeah. So this can be a swing high. Why I questioned you is that if we would have just a wick close beyond this swing, then it would be just a liquidity sweep. We would not count it as the break of structure. But at this point, we had nice candle close with the body.
Yeah. So this one was broken with candle close, forming a new high here, and this high was then ultimately closed below. So validating this or confirming this one as a swing high.
Yeah, exactly.
Oh my God. I'm getting it.
Yeah, you're doing good.
This is exciting.
Okay, so this is our new swing high, and this would be our new range.
Okay, so
Okay.
we have the low one here. Here, yeah, you could say that was taken out here, but definitely taken out here. So this would be a swing low.
Yeah.
Yeah.
And what else?
And
Anything else?
well, we see that this one is broken. So we have this. Yeah, this one is there, but do we see one here? Yeah, so there. Well, technically it is.
Yeah, we can say that it is a swing high. So yeah, this would be our new structure, new range.
The range is now a lot smaller.
Yeah.
Is that more or
And
less
when
risky?
I mean, when it is larger, as we had right here,
Yeah, that was
it takes so much time. Like if you check, what's that? It was like 1 month, and it takes a lot of time to find and enter the trades. And when the range gets smaller like this, then you can basically like find trades every 2 or 3 days.
Yeah.
So this is much better if you have this.
The price action is
moving
more
range.
volatile, right? In that case.
Yeah. So like for example, here, if you would wait for price to retrace into this area, you would wait like what, 12 days without any position, just waiting until price gets somewhere in your points of interest.
Yeah, but
And then you would wait.
But this would
like
also work on
18
lower
more
time
days.
frames, right? So we would look at maybe a 1 hour time frame and then a 5 minute. Is that a good high time frame, low time frame setup?
Yeah, we could look for other trades on other time frame pairs.
Yeah, and especially if you're trading
yes.
futures with leverage, that could work out fine, I suppose. I mean, on the spot market, it'll be a little bit difficult because then the swings are not good enough for you to generate a nice percentage. But with leverage, definitely possible.
Yeah, so let's see what we have next. So we have this trading range.
Yeah, so nothing broken yet, so we can't draw any new items. Well, this is an interesting one. Because now this is broken, but what do you pick as a high? Because actually, well, technically this one, but it's been in a downward one, so it's like it's difficult.
No, so we would pick this one first as a swing low.
A potential one. Well, right now we know that it's broken, so we can.
Well, yeah, we didn't have like body close, so yeah, we can skip that for now. We can wait until we have a body close. So we have this candle with the body close above that. So this would be our new swing low. And for the swing high, you actually like this is not a swing high, and
No.
this is not a swing high. We have our swing low, and this is swing low, and the only highest point between them is this swing high that we had before.
So the range is
you
extended.
Don't need to. Yeah, it is just extended, and that's it.
Nice. So as we're nearing the end of this session, if you have any questions, then please let us know, and then we can see if we can answer them if we already have the knowledge to do so. But the other thing that we the purpose of this live stream was also to just show you like the things that you need to be doing. So what I'm going to be doing is that now I know this is I'm going to be going into the replay and I'm going to be doing this to train my eyes. It's very, very important to do this. It is tedious, it is annoying, it is boring, but it has to be done to train your eyes properly. So do like what Roman did today. Start that replay and start marking these things, because this will ultimately help you when we start looking for actual trades. So fire up the replay, start marking these things. Roman, I was also thinking, like, maybe currently we don't support that, but I see that you have a lot of these drawing templates on your lines and boxes and whatnot.
Yeah.
Maybe it would be a possibility if we can allow people to import that so that we can share a set.
If that's possible, then yeah, of course.
Yeah, that's definitely possible. I mean, it requires a little bit of work of the developer. So if we tell him to move his ass, then we can definitely do that. Would anyone be interested in these drawing templates? Let us know either in the comments or in the chat. Now's your time. If we get the likes up to 10,000, then we'll add it next week.
Nice.
I always see that in live streams. I always wanted to say that. If we get the likes up to 10,000, we will do this. But no. Well, we got one person that said it would be great. So yeah, we'll definitely look into that.
Let's do that.
So that we can, yes, please. Yeah.
Okay. Yeah. So do you want to continue to have some time?
Yep. 10K likes for me.
Yeah. So what do you see here? Like we had this wick below the line.
Yeah. I would say that is a sweep because it didn't close.
Yeah, exactly. So this was a sweep and it was followed by the actual breakout. So we can say that this is a new swing low. And now
so because this is a sweep, it would never be a swing low?
It can be a swing low. Let me show you how. So in case if we didn't have that new breakout, in case if price would went up from here, forming a new swing high somewhere here, then instead of using this point as our swing low, we would want to pick just the absolute minimum point, just to make it more correct structure. So at this point, we would move our swing from here to here.
And then this one would be going there. Actually, we're going to the upside.
Yeah, we would have a new swing somewhere at the top.
Right. But if it, so that doesn't happen, so it moves down.
Yeah, let's see what we have here.
So right here, this one was the new swing low, but then this would be the new swing high, right?
Yeah, exactly. So we found this, the extreme level between the two swing lows that we had. And this would be this candle. So this will be our new swing high, making our range look like this. We have another breakout.
Yeah, it's broken. But what do we pick as the? We need to identify a new swing high, right? Then.
Yeah. So this would be our new swing low, and what is the maximum between these 2 points?
Oh, is it just that? Is it just the maximum between these?
Yeah.
Oh my God, I was looking for here, but no. If it's just between these, then no, not this one. So then it would be this one.
I don't really see. Yeah. So here,
not this one, because it wasn't the high. Because it wasn't the high of the 3.
Yeah, we just picked the most extreme candle.
Yeah, but this one is not allowed because it's attached, right?
Yeah, it is attached, but at this point, it is allowed because it is the absolute maximum, and that's how we can use it. And even if this white candle was a swing low, as we had a question before, so can one candle be a swing high and swing low at the same time? This is what we had. So we would have this swing low, and the maximum point between them would be this one.
Yeah, so let's put the question back up in the screen. So this question, if a new candle creates both higher high and lower low, which one is then more important? Well, as you say now, they both count.
Yeah. Sometimes you might need to go to lower time frame and see like what was formed first. So in this example, you see that we have
because
low.
that's obviously also possible. Like the and then it wouldn't count because it's not in between the two lows.
What do you mean?
So if this was the other way around on the higher one, then this one would be like here, and then that higher point would not be in between these two.
Yeah, exactly.
And then it wouldn't count. Oh my god. So, boss, that's how you do it. You look for the highest point in between these two that actually is a swing high, and still following the rules of the swing high. So the candle, higher candle, and then the lower with the wicks, of course. Well, my drawings disappear. But yeah, that's how you do it. Wow, I've learned so much in this one.
Yeah, let's just look at a few more examples, and then I think we can wrap this up.
No breaks, no closes, nothing to do.
Yeah, you can see that we have some liquidity sweeps here, and this is not a swing, not a breakout, so we can just ignore it for now. And yeah, right now we have this breakout with the candle close, with the body close.
Close. So,
but
this one,
this is not a swing yet, because we don't have any candle next to it. We cannot say that this is a swing.
Oh, and it's not.
At this point,
oh, it is. It is. Yeah.
At this point, yeah, we can say that it is a swing high.
So potential swing high, not confirmed yet.
It is confirmed.
Oh yeah, it is confirmed. Yeah, true.
Yeah.
Yeah.
So
because you draw
this
thing there.
changes our range to this one. And yeah, and then again, we just continue doing like this.
But then we need to find a new.
No, we had this swing low. We had it here, and then we had a swing high.
Oh, because now we're breaking the this is a reversal of the pattern, right?
Yeah.
So we're breaking the bearish structure in this case.
Yeah. So in this example, so here we cannot say that this is a swing high, this point, because we didn't have any price action below this area. So we'll skip that and wait until we have a nice candle. So this would be our new swing high, as it was validated here. And yeah, now we just need to find a new swing low between these two swing highs.
Oh, my mind is already going like, how can I automate this? How can I automate this?
Yeah, you should try that.
Yeah, no, I want to.
So yeah, we just need to find the most minimum point between these two, and this will be a new swing low. And that's it. And you just continue doing it like this.
Yeah, and as you've told me, you've spent hours doing this, right? So you would just you would just block out like 1 or 2 hours, and you just do this in one chart, not taking any trades, just training your eyes to do this.
Yeah, and the funny part is that even after like 10 hours of doing that, like over a couple of days, I was still making so many mistakes that I was noticing later. So yeah, it requires a lot of practice to actually find these points and like not fall into marking every candle like this. So these are not swings. And I had a lot of these errors, a lot of mistakes.
Yeah.
But yeah, that's how you do it. You just activate the replay and you mark every swing high, swing low.
So what are we going to be talking about next week? Just as a sneak preview for the next week.
Yeah, so next week will be a direct continuation of this topic. So we will talk about the market structure. So now we've learned how to identify the swing points, but then on the next stream, we'll see how to actually identify the market structure. We can see that like when price breaks out above, it might be a break of structure to the bullish side, or sometimes can be to the bearish side. But this is not so easy so simple as it seems, because there will be a lot of new terms that we will need to learn and a lot of new cases that you need to see in order to properly identify the structure.
Yeah. So another thing that if you're still watching here, and I know it's a bit late at the end of the stream, but we will reiterate this on the next one actually, is that we will start to open up a channel in Discord, and we would encourage you to do these tests and join us on Discord and share your charts so that we can have a discussion about what they look like. Did you identify the higher highs and lower lows correctly? So that we can help out each other. So we do encourage you for the next week, try it out, do this, and share your charts into the Discord channel that we will open up. If you don't know how to join Discord, there should be like a purple button at the top right here somewhere if you haven't joined yet. If you don't like the purple button and you don't want to join, you can just click on it and then say, I don't want to be bugged with this anymore, and then it goes away. But if you still want to join Discord, then also on our website, we have a link to Discord and you can join there. And then find the Smart Money Concept channel. Did you have anything to add, Roman?
I'm not sure. I think I've said everything.
And what hasn't been said, we can discuss on Discord as well.
Yeah, sounds good.
Then on that bombshell, as Jeremy Clarkson always says, I will leave you to it. I encourage you to try it out. And then we'll see you on Discord. And if not, then we'll see you next week. Thanks, everyone. Thank you for watching and have a good day. Bye.
Bye.